Hello traders, you are welcome back to the Forex Geek channel. Have you ever been stopped out of a trade only to see the market reverse in your favor right after? Well, that is not just bad luck. Yeah, it's actually liquidity at play. So in this video, we just want to look at the concept called liquidity. Okay, we want to understand what this liquidity of a thing is all about, yeah, and how you can avoid being a victim of liquidity. Okay, instead how to take advantage of it. Okay, because liquidity is one of the most important concepts in trading, and if you understand how it works, you can actually start trading like the big players. So in this video, we're going to be breaking down liquidity concepts from beginner to advanced, step by step. So if you're serious about improving your trading, make sure to hit that like button and subscribe for more powerful Forex trading content. Now, let us start with the basics. Yeah. What is liquidity? In simple terms, liquidity refers to how easily an asset can be bought or sold without drastically changing its price. Now, in Forex, liquidity is provided by banks, institutions, and retail traders who place orders in the market. So the higher the liquidity, the smoother price movements tend to be. But there is a catch, yeah? Smart money knows where liquidity exists and they use it to their advantage. This is why you often see price spike to certain levels before reversing. Like what we can see, I saw something, like that. Let's see if we can find it. I hope we do. I saw an example. I just want to show you guys that example. Yes, I want to show you that example that I saw on this chart. Yeah, it's something that actually happens, on various occasions. Yeah, it's not even a one-time something. It happens on various occasions, although it might not necessarily, it might not necessarily happen all the time. Yeah, it might not necessarily happen all the time, but it happens on various occasions. Yeah, okay, it's like that's not it. That's not exactly it. Yeah. I just want to show you an example right before we proceed. Okay, I think this is an example where we had price spike to one direction. Price just, you can see that this is actually a zone, yeah, we had around here. But can you see that price spiked in one direction, broke below this zone, and before you know it, it reversed back upward. And guess what? After it went back upward, price came back and retested this zone and continued to the upside. Okay, so now let's just talk about the two types of liquidity that matter most in trading. Okay, first of all, we're going to be looking at the buy side liquidity, which is above price. Okay, so what does that mean? That means these are areas where buy orders are usually set. Okay, that's the reason why it's called the buy side liquidity, and it's usually above price. For example, if I'm to enter a sell trade around here, around this resistance, guess what? I'll most likely set my stop loss above the resistance, right? That's the ideal thing to do. And then your take profit can just be probably around support zone. So buy orders are usually found above resistance, above price. And then those are stop losses for sell orders and also buy stop orders for those who anticipate a breakout to the upside and then possibly a continuation in the direction of the breakout. You can see that on several occasions, price actually got to this resistance zone. You can see price actually got to this resistance zone and got rejected. Can we see? On several occasions, price actually got to that resistance zone until we finally had a breakout. So those who set buy stop orders, when the breakout finally happens, then price will continue in the direction of their or in the direction of the breakout, and then they will end up making profits. So usually above resistance, you usually have sell order stop losses for sell orders and buy stops orders as well. Okay, so that is the buy side liquidity. Okay, price often moves up to these levels to trigger stop hunts before reversing. All right, then we also have the sell side liquidity. That one is below price. Yeah, this is where sell orders. This is where sell orders, like stop losses from long trades. Yeah, stop losses from long traders set. Usually, if you're gonna enter, if you're gonna enter a, a sell, if you're gonna enter a sell, a buy order, if you're going to enter a buy trade in the direction of, sorry, if you're going to enter a buy trade from around a support zone, the ideal place to set your stop loss is going to be below support, right? It's going to be below the support. So usually we have stop loss orders for buy trades below support, and also sell stop orders for those. We usually have stop loss orders for buy trades, and sell stop orders for those who anticipate a breakout, because if a breakout happens, there will likely be a, a continuation in the direction of the breakout, right? So the sell side liquidity is usually below price, which is where sell orders sit. Okay, and price can dip into these zones just to grab liquidity and then push higher. So have you ever noticed how price oftentimes price will break through these levels? Let's see if we can find a very, very good example. Oftentimes price will break through these levels only to reverse. So I believe if you have been in the market for a while, you might have seen such scenarios. Yes, if you have been in the market for a while, you might have actually seen such scenarios where price breaks through a key level. Yeah, price breaks through a key level only for it to reverse, and start going back in the opposite direction. So it happens sometimes. It happens sometimes. Let's see if we can find a very, very good example. See if we can find a very good example. Okay, for example, here we can see that we had a zone here, right? This was supposed to be a support. You can see got rejected here, got rejected here, got rejected here. But guess what? Guess what? When at this particular time, it did not just get rejected initially, it dropped below it and swept liquidity. Yeah, we can see that the price actually broke out falsely and reversed back in the opposite direction. And guess what? The next time the price came to that level, it got rejected at the appropriate place and continued the upward move. So this is a kind of situation that we call a false breakout. Okay, because retail traders chase breakouts, but smart money uses those breakouts to enter the position in the opposite direction, to enter their own positions after liquidity is taken. Institutions and market makers push price into liquidity zones to trigger stop losses and fill their orders at better prices. So you can see that that was probably, it's possible that something like that happened around here, right? Because you can see, just look at how this candle is. Look at the long wick. That shows that this level was broken, and of course, some liquidities were grabbed and then price reversed. Because those that set their stop loss below here, their stop losses would have been hit. Those that set sell stop orders, their orders will be triggered only for price to reverse, and they'll end up being in losses. So you can see that liquidity was likely grabbed, and then before the market reversed and went back upwards. Okay, so recognizing these liquidity moves can actually help you avoid getting trapped and start trading with the smart money. So now that we understand how liquidity works, let us just talk about how to find it on a chart. Okay, the key liquidity areas to watch are swing highs and swing lows. Okay, swing highs. Remember that swing highs are, these are swing highs, right? Swing highs and swing lows. So those are key areas to watch. All right, because these levels hold stop losses and pending orders. And then watch out for support and resistance zones. Okay, areas to where prices are rejected. They are often targeted for liquidity grabs. Then watch out for big wicks and sharp moves. Signs of liquidity sweeps before price moves in the real direction. Okay, so the goal is to look for areas where price is likely to make a liquidity grab and then reverse. So instead of getting caught in these moves, we use them to enter trades. All right. Now let's just quickly talk about how to use liquidity in your actual trading. The first is liquidity sweep entries. You have to wait for price to take out liquidity. That is stop hunts. Wait for stop hunts to happen first. then you enter in the opposite direction where when confirmation appears. For example, if we are patient enough, for those who might have been falling victim of this stop hunt, if you had waited patiently, wait for this candle to close. Anytime a breakout happens, don't jump in. Okay, don't jump in immediately. Wait for a retest first. That's the reason why retests are one of the things that validates a breakout. Wait for a retest first and a continuation before you enter in the direction of the breakout. Okay, don't jump in immediately. If you had waited for this candle to close, you will notice that this candle just was a liquidity sweep candle, because it was just serving for liquidity grab. Because you will see that same candle, just see how long the wick is. Within that same candle, buyers took back control and pushed the price up. And guess what? Look at the next candle. It was a strong bullish candle. So if you were patient enough, you would have seen that this was just a false breakout and you will not have fallen victim. So what does that mean? Always wait for price to take out liquidity first. It doesn't mean that every time you have a breakout that is false. No, there are actually legit breakouts, which means you should wait for confirmation first to know if it is a legit breakout or not. All right. Now, instead of entering on breakouts, just wait for liquidity grabs at key levels before jumping in, or wait for confirmation of that breakout first before jumping in. Okay. And then combine liquidity zones with institutional order blocks for high probability setups. Now, these strategies help you trade smarter and avoid getting manipulated by the market. So that is it, guys. That is it. Now you have a complete understanding of liquidity concepts, how smart money uses them, and how you can trade them effectively. Okay, so now if this video helped you, make sure to smash that like button and subscribe for more expert trading content. All right, and let me know in the comments, have you ever been caught in a liquidity grab before? Let us talk about it. Okay, in the meantime, thank you for watching, and I look forward to seeing you in the next video. Happy trading.